Right. Welcome back, everybody. Today we are going to be continuing our journey into the periodic inventory. This time we're going to be looking in the costing method of FIFO, which I'll go ahead and explain what that is. So yesterday, of course, we went over how to journalize our when we make purchases. We're going to be journalizing purchase expense and freight expense. And we saw an example of what happens when we have discounts involved and when we have to return items to the vendor. Today, this is where we're going to be actually calculating how the flow of inventory will work. So we're going to be introducing costing methods, all right? So there are a lot of ways you can calculate inventory, especially when you're costing it. So what does that really mean? It's just like when you are, with the minute you purchase it and how you sell it is going to be is exactly what costing method is going to determine. Now, I will also give you some examples of each one. So the ones I do want to let you know is we're only going to be focusing on three costing methods out of four. Okay, so the first thing we're going to be going over is going to be first in and first out method. All right, the other three is going to be last in or is first out. Then we're going to be looking into weighted average, and then the last one is going to be specific ID. For the purpose of this class, we do not actually have enough time, as well as the complexity of specific ID. We're not going to be learning that at all. But I do want you to also be able to recognize that there is that type of inventory costing method. Now, first in, first out, okay, is pretty straightforward. If you're looking at a grocery store standpoint, they have perishable goods, right? When we're buying our inventory, every batch that we buy is going to be the first section that we're getting, right? So you want to make sure that you sell the first batch first. So that is exactly what the concept of first in is, the first out. So if I'm going to be buying a bunch of batches, especially perishable goods, I want to make sure I sell the first batch first, because if I don't, they're going to go bad. So that's a perfect example of first in, first out. Now, when we're dealing with LIFO, which is the last in or the first out, this is more like when you're selling electronics or special products, right? That doesn't really have a determining a shelf life. Okay, so for example, perfect example is a cell phone store, right? iPhones, right? Every store that you walk into, whether it's the Apple store, they want to get rid of the most latest models first. Why? Because it's the most popular, it's the most, running one. However, the old models are still selling, but not as often. So again, the latest model, which be the last thing you release, is usually the first thing that's either buys out or sells out first, okay? So again, think of the cell phone store. You got iPhone 8, iPhone 10, and iPhone 11, right? That's batch 1, batch 2, and batch 3. You're more likely to sell your iPhone 11s first than you would more for the iPhones 8, okay? Lastly, weighted average. Weighted average is where you don't really care about the cost of the product. Because in the end, you're going to calculate them all together, and you're just going to spread the cost evenly out. So again, this example would be water bottles, right? Water bottles is a necessity. It doesn't matter how much you buy or when you buy it. You're just going to sell it at the same price and cost it at the same price, because it doesn't really matter to your company how much how much you're selling them or how much you're buying them. You're just going to take the average of them and just cost them out. It's a necessity that you're going to always have in your store. Okay? So any questions on the difference between the three the three different types of costing methods. Okay. First in, first out is going to be what we're going to be working on. Go ahead. Yes, David?
Oh, I was just gonna say your examples you gave were good.
Okay.
They made me understand them.
Okay. Perfect. Thank you. All right. So now today, for today's only focus, I only want to only focus on first in, first out. All right. So again, I explained first in, first out. These are going to be the formulas that you will be looking into. All right. Understanding how do you get a purchase price, right? It's going to be the quantity multiply the unit price, and you're going to get a purchase price. Okay. Then when you again, we're also introduced to freight. So when we're looking at total costs, it's going to be everything that's included into inventory, right? So that's going to be your purchase price plus your freight expense. And that will give you a total cost. The next thing that we're going to be looking, yes?
Okay, I just want to make sure they understand. Right now in class, we're only dealing with freight, but there's total cost includes everything: freight, insurance, special handling, anything else that costs you to get it to your door goes to the total cost of your inventory. Right now in class, to make it simple, we're only dealing with freight. I want you to know that the total cost includes everything it costs you to get that product to your door. You understand that?
Right.
Mm-hmm. Yeah, so for this class, we're only going to make it very simple to understand that we're only going to be dealing with just the product itself and just only freight to get our total cost. Okay, just for this class. Now the next thing that we're going to be looking into is per cost per item. So what that is going to be is going to be your total cost, and it's going to be divided by the quantity. Okay, and that's going to give you your cost per item. The second part is well, I'll talk about it in a few minutes, but the formula is when we're looking with the goods available, right? If we do have beginning inventory from the previous section, then we're going to include beginning inventory, and it's going to be plus your net purchases, which when we go into the example, it will make a lot more sense what this formula is. Lastly, cost of goods sold is going to be your goods available minus your ending balance. Okay? So we'll talk about that when we move into the example. All right? So here we go. We're going to start diving in, and let's look at this example. So the first thing is there are a total of 3 transactions. Okay? We have June 1st, we have June 11, and June 15. Okay? And first thing I want you to do is I want you to practice journalizing again. So let's go ahead and do the first one. So June 1st, you made a purchase of 100 toys for $1.25 each. Freight is $25. Assume sales tax is 8.725. All right, so we're going to be introducing a little more extra factor here. All right, so how do you journalize this?
Start with, and then purchase expense.
Purchase expense.
Uh, $125.
$125. All right.
And then on your next line will be freight expense.
Freight expense, that's correct.
$25.
For $25. And we're just going to assume all of these are going to be on account.
So accounts payable, 150.
Exactly. All right, good. Wait, yes, good. So it's 150.
Do we do anything with that sales tax?
The question is sales tax. Sales tax happens when?
At the end.
No, when we're doing what? When do we include sales tax?
Lynn,
Yes?
I'm gonna call on you on the phone for a minute.
Okay.
Once I get your phone number, please. There we go.
Okay.
So mute yourself for a minute.
Okay. Sorry about that, guys.
It's okay.
Hello? Mm-hmm. Yes, but that's why I'm trying to get them to get to be like, why am I not including tax? Because there is no sales tax because we're not selling our product. Okay, so going back to our PowerPoint. Okay, so let me go ahead and do this. So yes, okay, so June 1st, yes, we recognize that we have a purchase expense and a freight expense. We don't include sales tax.
You
Reason
still
being,
there, Lynn? I can't hear you.
yes, yeah,
She's on the phone with Robert.
No, she's off phone with me now.
Oh, okay.
Okay.
Oh, I'm talking to
Well,
there you go.
All
her.
right.
Yes.
All right, so now we're gonna be introducing back to this. So, yes. So here we recognize that on June 1st that we had a purchase expense and a freight expense and accounts payable. We don't include sales tax because one, we're not making a sales, and two, we're a wholesaler, so we got exempt from sales tax. Okay, so good. That's exactly how you journalize it. Now, this is the next page is going to be introducing to what happens when we work into a inventory worksheet. So on June 1st, here is where we're looking at this. We're going to be putting in the date, the quantity, the unit price, and then our freight expense. So again, now we have to fill out the rest of the table. So again, this is where the formulas come in. So how do you find purchase price?
quantity times price per unit.
Okay, so it's going to give you what?
$125.
$125. Yes. So again, this is the inventory worksheet. So this is this is what you will be utilizing to calculate the cost that you're looking for. All right, good. So we have that 125. All right. So how do you find total cost?
The purchase price 125 plus the freight, which is $25, be $150.
That's correct. All right. Now, last thing is how do I find the cost per item?
You divide the total cost by the quantity. So
Mm-hmm.
150 divided by 100.
Gives you
Oh, $1.50.
yes, so it gives us $1.50 at the end of each thing. So now that we included every single cost, so when we're selling our products, we need to make sure that when we cost it, we're gonna be subtracting $1.50 instead of $1.25. Okay? Because we're including all of our costs to get our item to the door. So we're spreading all the costs to make sure that when we sell our product, that we include everything that cost us to get the product to the store. So again, we're going to be costing out our when we sell our products, we're going to sell them. We're going to sell them at a higher price, obviously, but this is how much we're going to subtract out of our inventory. Okay.
Okay.
So now the next scenario is going to ask you how to I forgot to do that. For the next scenario, we're going to be journalizing the second batch. So again, we were looking in at purchase price, which was I think it was $1. $28. I'm going to go ahead and look back exactly to what that thing was. So on June 11th, you made a purchase of 100 toys at $1.28, and the freight is $26.
Yes.
All right. So now we're looking into this. So we recognize that our purchase expense, right? We had 100 items. So now it's 128. And we need to include the freight, which is $26, which gives us an accounts payable for $154. So again,
Yes.
now we're putting it back into our table. We recognize the date was June 11. We purchased another 100 toys at $1.28. We included that in our purchase price. And then we added our freight, which gave us $154. Now we calculate it. We calculate the cost per item, and now we're down to $1.54 for each item we sell.
Yes.
Okay? So what's going to happen is once we reach at the end of the period, okay, so any given period, so in this case, I want to end my day on the 15th of June. So what's going to happen is you're going to calculate the totals of each column. All right? So again, how many items did I have available? This is your goods available or your net purchases, okay? So I have a total of 200 items. All right? How much did those 200 items cost me in total? $253. How much was the total freight? It was $51. So therefore, for the total of having the 200 items, I'm at $304. Okay? Now these four numbers are going to be very, very pertinent to the next section. So when we're looking at our inventory worksheet, which I forgot to post, I'm so sorry about that. But when we look into our inventory worksheet, we're going to be introducing to two sections. So this was the top section. Now, what I mean by the second section is going to be this column right here. So when we're dealing with this, we're going to be recognizing a few things, okay? We're going to be recognizing our total purchases, if we have any returns and allowances, what our subtotal is, we're going to add our freight, and then we're going to end up getting what's called net purchases, okay? This is the total amount that we're accumulating for our for this problem, right? This is the total amount of inventory I purchased within the first 15 days of June, okay? The next section you're going to be looking is cost of goods sold. We're going to be looking at beginning inventory. Did we have any beginning inventory in this problem? No, because it wasn't specified, nor we just began our business in June. So therefore, we don't have any beginning inventory. Then you're going to actually take the number from net purchases and you're going to move it down here. So again, the formula was beginning inventory plus your net purchases is going to give you your goods available. So in this case, I had 0 beginning balance. I had a net purchase of 200, and I'm going to get my goods available that I have available to sell is 200. And then so on and so forth for the previous one. For the cost. So again, I had 0 cost, and therefore my total cost of net purchases was $304, and now that means out of the inventory I have available $304 to sell. Okay, and then you will be given at every single periodic inventory. Someone's going to go physically down to the basement or warehouse or wherever you put your inventory. And they're going to ask you, then they're going to tell you, we only have 80 items available. Okay? We only have 80 items available, and that's your ending balance. So now what we have to do is, our job is to, when we're costing this, we need to calculate how much is the cost of having those 80 items in our inventory, how much did we sell, and how much did it cost us to sell those items. All right, so we're going to be focusing at the last two rows in this problem right here.
Okay.
So again, we were told that on June 15th you had a total of 80 toys left in inventory, and cost of goods sold, right, is going to be your goods available minus your ending inventory. All right, so here's that formula again. Now let's go ahead and solve for this problem. So how do we find the cost of goods sold? How many units do we have available? How many units did we sell? If we had a total of 200 units and we have right now in the store 80, how many did we sell?
120.
120, that's correct. Now the next step is we need to solve for how much are those units, how much are they worth? Okay, so that's where we're going to go back into our inventory worksheet, and we're going to be introducing to the workspace, which we're going to go ahead and look at the guidelines. We have two batches, right? We have the first batch is cost us $150 to sell. And then we have our second batch of 100, which was worth $1.54. Now, understanding the first in, first out method, we're going to be utilizing the first batch of inventory that we have, because the first batch that came in are the first ones that we need to sell. So understanding that concept, we're going to calculate our cost of goods sold, all right, by recognizing, okay, let's look at the available goods we have, and let's look at how much we sold. So here we already calculated that we sold 120. So what we can do is, from the first batch, we already know that cost us $150 to have, right? And that's just only the first 100. Now we still have 20 left that we sold. And where are you going to be taking that out of?
Quantity.
Yes. Okay, no. If we get rid of the first batch, what batch do we have left?
Second batch.
The second batch, yes. And if the second batch has 100 items available, and we need to sell 20 of them, how do we calculate that?
100 minus 80. 100 minus
Okay.
80 equals 80.
Okay, so 20 is your quantity. How much does it cost per item to sell?
$1.54.
$1.54. So if you multiply those two numbers, you're going to get a total cost, which is going to be here so 20 times $1.54 is going to give us $30.80. So what's going to happen is 100 plus that 20 items you sold. So 150 plus 30.80 is going to give us a total of 180.80. And that's how much our cost of goods sold is going to cost us. Okay? And from there, using simple math, if you have $304 available and you sold $180.80, what is left over?
120. 24.
100, okay, keep going. So we're going to take our 304 and we're going to subtract the 180.80. And that's going to get us our 123.20. Close, David. You just forgot the cents.
Okay, that's close. Oh, I was doing it in my head, so.
Yes. So again, Simple, easy, straightforward. So again, ending balance, right? Cost is going to be 80 times either the 154, which is 123.20, or you can actually go ahead and take the 304, subtract the 180 to get 123.20, okay? You can choose either way that you want to solve it. As long as at the end of the day, your ending cost and the cost of goods sold is going to be equal to 304 at the end of the day, okay? So any questions on how this work? How to calculate FIFO?
Okay, so to calculate the first, we use the first in, first out method.
Mm-hmm.
We use the numbers from the first batch
Yes.
to calculate what was sold and what
Mm-hmm.
is left.
Mm-hmm.
Okay, and that's how we came up with the 123.20
Yes.
for 80 products left.
Mm-hmm. So again, notice. So here's the here's the last page for this one. So notice, in our inventory, we had a total of 200. Now we're left with 80. And how do we calculate that? Here we have 100 units that cost us $1.50. So it was for 150. Then we sold 20 more items at $1.54, which cost us $30.80. And if we totaled that, we have a total of 120 items and we have a total of 180.80 cents.
Yes.
Yes. And if you notice, we started from the first batch and then we dipped into the second batch.
Well, that's why it's first in, first out.
Exactly.
The first batch.
Yes.
Out. Okay.
Yes. All right.
And so we're going to need to know a lot of math.
Yes. But it's also it's if you understand the flow of the transaction, it should be pretty straightforward. Okay, think of yourself as a in a shopping mart or store, whatever you want to look at, and what's gonna happen is just think about, I need to buy 20 products. If it costs me $1.99, how do I get the total amount? How do I get how much total it's gonna cost me? You're gonna multiply those two numbers together.
Right.
Okay. So I'm actually gonna go over this last concept first, and then we could take a break. So so let's look at the numbers again. When we have once we solve the table, okay, let's focus on the bottom half under the cost of goods sold. If we have our ending inventory and if we have our cost of goods sold, right, we have the dollar value for it right here. We have 123.20 and we have 180.80. And then, yes. So in order to do the next portion, which is called the conversion, you will need to have this table right here. This table right here. You're gonna need to know your net purchases. You're gonna need to know. I'm sorry. You need to know your purchases. You're gonna need to know your freight amount, and you're gonna need to know your cost of goods sold and ending inventory. All right. So let's go ahead and explain what the next portion is, okay? So once we reach the end of the period, we're going to be introduced to the conversion entry. Now, what the conversion entry is right, we are going to convert our expenses and transform them into assets. So again, at the end of the period, we're going to convert our purchases and turn them into assets. Okay, so let's look at this journal entry for example. I'm going to put everything into inventory for the remaining that I have left. And I'm going to have my cost of goods sold because I don't have that stuff anymore. So I need to get rid of it. And then here we have your purchases and you have your freight. Okay? So again, when we're looking at this portion here, all the answers are right here in front of you. You have your purchase amount, which was $253. You have your total freight amount, which was $51. And then you have the inventory, right? This is how much you have left on hand, right? This is ending inventory, right? You need to transfer 80 items, which was cost you $123.20. And we got rid of 120 items. So therefore, that cost me $180.80. Okay? So once we reach the end of the period and we need to convert it into inventory, what's going to happen? So again, I put the table here in front of you so you can recognize and where to get the information from. So again, we bought toys, so that's our inventory item. We're converting it into inventory, which is an asset, because we still had 80 items left in inventory. Therefore, we need to recognize that we need to convert 80 of those items into inventory, which is it cost me $123.20. Okay? And then, of course, we don't have it because what we originally purchased for was 200 items. So again, cost of goods sold, it's an expense. So therefore, I need to get rid of it because I no longer have it. So again, we've already calculated that in the inventory worksheet, and I recognize that I have 180. All right. Then we're going to recognize our purchase expense. Our total purchase expense was $253, and our total freight expense was $51. In the end, you're going to notice that your debits are equal to your credits. All right? And just looking at where all the information came from.
Okay.
All right? Any questions about this conversion problem, conversion entry? Okay? This is very important because when we move on to the next problem, we're going to be taking these 80 items that we had and we're now going to include it as beginning inventory. All right? And I can go ahead and we'll take a break and then we'll continue on, so on and so forth.